All right, Kevin, this is for Tuesday, April 23rd. I'm in the corn spread section of your local. Okay, here we are. Negative 18 even still, pretty much, is the channel top. We want to see this spread settle above. This is July D's. This is July D's support, negative 21.5. So we got a two-sided framework into next week between those two. If we can settle above negative 18 even, looks good. Looks great, actually, into a May trade. Here's D's March. I don't know what D's March. May, July. May's going off the board soon enough. I don't think we want to get in that. In fact, I'm just going to take that off. I'm going to take this off. This is also May, July. D's March. We close above this. That looks good. And then we just might see this up here. So a close above this negative 13.4. I don't know. I just don't like the way these charts look. They look like 5-minute bar charts. Here's D's 19, D's 20. Sold off today. Negative 33.7 is likely, and that's an area we could consider buying. It's a long-term descending channel bottom. Already looked at July D's. This is D's D's. This is D's March 20. I just looked at that. Yeah, that pretty much sums it up. July D's. Yeah, we're already in that. D's March of 20. There we are again. We already looked at that. So anyway, if you want to talk more about the different corn spreads, but this is the that's the one we're in. Want to see a settlement above 18 even. Let's run over to our live cattle spread that we're in. Looks about the same as when we talked earlier. What am I looking for here? There it is. 3.225. If we close above that today, that looks bullish, despite the fact we still have this resistance, as we were saying. But holding below 3.225, this area is likely, possibly by the end of next week, soon to be 1.900. All right. And let's talk, just covering our positions. Canadian dollar. 75.40, settlement above looks great. Otherwise, this thing is just sitting in the mud in the midst of crude oil strength. I'm afraid what might happen if crude oil drops a buck, 2 or 3 in the next week. We would probably get a settlement below this area here, which is at 74.76. We closed below 74.76 today. Doesn't look good. We get out. And that's the Canadian. While we're in the currencies, I'll just start jumping around here. Nothing going on in the euro. Take a look at the British. British testing its support, 29.87 this week. I do believe that if we close below this level on Friday, that's bearish British pound. And we may then look for puts to buy, out of the money puts. After having clearly traded above this formation, but more importantly is this ascending channel bottom. 29.87 this week. US dollar hanging in there, still bullish above the upper 94. What do we got here? 94.76 to 95.30. I can update this now. Widening range of long-term support, able to contain selling through the second quarter and above which this upper area remains our target, 99.75. Gold update. Still a target. All comes together up here in the 1320s. I'm just going to leave these numbers alone. It's all still here. And this is still our target, 63.7. Close below this, bearish continuation. Once we test this, though, the market can rally back up into this area. And at some point, you know, this channel structure will intersect with this rising one, you know. Silver. Still weak. This is 269 now this week. That's our ceiling. Remains weak below it. Copper. 84.37 this week. Our base of support. Above which, stable to bullish. More bullish than stable, but we certainly are in a consolidative framework here for the last. This is a weekly chart. For as long as we've been doing the fund analysis, we've been in this framework. But not until we settle below 84.37 is this thing, you know, ready to go short. 10-year notes. All right, what do we have here? 12, 13, 12, 15. Excuse me. 13 to 15. That's the base of support. That can absorb selling through the second quarter, and the market can then turn up. It's also a sell signal below. So we'll watch this. Oh, take a quick look at the NASDAQ. It's just higher, higher, higher. Now getting settlements just above these former highs. Still a target. Sugar. Testing this area right now, which is at 1306 still. Close above 1306, sugar looks good. Expecting at least 1388, and more than likely, longer term, we can push up into this channel top. This band of resistance has been holding, and if we close above this at the end of the week, it looks good. Cocoa. Cocoa. $23.33, we're testing it. That's the support. Huh. I should take a fresh look at this stuff. Hold on a second. Yeah, I think this is the one. Yeah, that's the area. All right, here's our support, 2308 to 2301. That if settled below, turns this sucker south. Until then, that's the base of support. Yeah, but we're still in a consolidative thing going on here. You know, there's nothing really happening in terms of a screaming buy signal. I think if at the end of this week we settled above this area here, which would be beyond all these highs, that would be good. Above 24.17, I'll keep an eye on that. But right now, base of support in cocoa. Coffee. which will include cotton. Cotton's hanging in there. Support this week is 76.37. And resistance is a widening range now. So there is a case to be made for a mere settlement above 79.34. I'm going to try to that's that channel top. 80.21 is this channel bottom. So I think a mere settlement above 79.34 is a reason to go long. It would be beyond all these highs as well. So I am inclined to simplify this and just say buy signal the end of this week above 79.34. And then I think we could have a better part of a week or so where we kind of screw around in this area, but I think as long as we continue closing above this descending channel from top, this looks good for cotton. Until then, here's our support that if settled below turns the market south. So we're narrowing in cotton. This is coffee. Interesting. This is this week so far. This is channel 1-2, 93.51. And last week's high was 94.20. So if we settle above 94.20 as well, this area is a buy signal. Until then, we could slip back as the week continues. All right, let's talk a look. Okay, let's go back into the spreads. Live cattle. Double bottom here. 350, 3. This is all still current. This range of resistance. And this area here, 455, is still likely. All right. And that is, by the way, the October DEES. We've been talking a lot about it. August, October, it's trading higher. This tomorrow is negative. And rising. Can contain weekly highs. If we close above it, it takes off. And then we're looking for something like this. That's that channel I just showed up into here. This is where I said 1.0 would be the target. Okay, so if we close above this, I have no problem buying this spread in anticipation of this. That is about a 1 point move. We could buy a couple of them perhaps, if you like. The settlement, high settlement is 0.752, which we how these dates work. 26, 20, okay, 26 would be Friday, 29th Monday. Later next week, in the early May, this lines up with these high settlements. All right, that's August, October. You know, until then, this is an area to sell, by the way. I don't know if you're inclined to do that. We could sell this formation and allow for a collapse back to this channel bottom within a couple of weeks. That's another close to a 1 point. That is another 1 point move here on the downside. This is October DEES resistance if we get above that 342.5 area or 332.5. This is DEES Feb, still bearish, still anticipating this. It's actually still 257.5 for tomorrow. And this resistance is still 182.5. And finally, this is Feb April. Here's our resistance tomorrow at 525. Same price level, negative 0.75. So we're consolidating, trading sideways, resistance, buy signal above. This is also a sell area, and secondary sell signal below this. Let's take a look at the lean hog spreads. Clearly settled below this formation today. At 7.175, that is our resistance. And really not until we get above here, 8 even, do we turn bullish. So this is a bearish market right now, and I think we covered this earlier today. What is the target, right? October. This is June by the way. We can jump into this right now. This is 6.225. All these spreads seem weak. I don't know. Excuse me, I'm going to sneeze. Dealing with a head cold here, out of the blue. You know, technically this is support, so, you know, it's buyable. But all these spreads just seem so damn weak. I just don't know if it's the smart thing to do. I'd almost rather play the short side here, below 7175. OG. Let me take a look at this. I know that we've got some levels. There's October D's. OG. Okay. This is kind of like a double channel bottom. And there's not a whole lot to find here in terms of targets. You know, you can do some Fibonacci wave counts. I like those when they correspond to other things. So you got a full wave here at 5725. But all your Fibonacci's are down here. Your 1382, 150, 158s, they're all in this double channel extension. So this, I'm allowing for that, really. Came through, we broke this channel. All right, so those would be your targets. October D's, once again, 390. June OG. Support, if violated, you've got, where do you go, you know? I think once again, you're kind of looking at, and this is just a guesstimate. Somewhere down in here would be a double channel. I'm just eyeballing that. And then once again, you can do these Fibonacci wave counts that I've customized into Fibonacci. So these Fibonacci waves are all down here. You've got a full wave here. But if we settle below this, this is what we're looking for. And this speed line is no longer valid because we've got a new low here. So here's the simple negative 11s if we close below it. Same one. Oh no, that's October once again. Yeah, we settled below that. Yeah, so June is not showing the bearishness that the others are, but that the others are is cause for concern, don't you think? I mean, or is a spread a spread? I mean, do we just trade it? Looking around other spreads here, let's see what we see. Okay, I've been looking at this. This is daily. This we're not going to see anytime soon. Negative 21.5. We've got 18 above. Here it is. 16, negative 16.5. And this is July Nove once again. So we're bearish between negative 18 and negative 16.5. Bullish above negative 16.5. move on here. Wheat spreads. July Dees. This channel top held. It's now negative 22.7. And in fact, this spread is bullish above here. This is just a channel top. It really doesn't mean a whole lot. I do like this spread to buy if we close above negative 22.7. But until then, it's consolidation and even a down pitch here, as this area is in reach over the coming weeks. This is a daily chart. These numbers are pretty consistent still. Excuse me, negative 22.7 on the July D spread. Hold on. All right. This spread settled negative last Friday or Thursday and sold off heavily today. Oh, that's not your perfect channel bottom. That's May, July anyway. I don't think we want to get into any May. I'm going off the boards in a few weeks. Dees March, negative 17.2. Huh. So we're testing support in the Dees March. What to do? This is also a channel bottom. 3.2. Negative 17.3. All comes together in there. We can talk about this too, whether we want to buy it. 17.2. All right. I think that's it for the spreads and the extra curriculars, if you will. Let's jump into the newsletters themselves. Lean Hogs, June. Oh boy, my chart screwed up today. Hold on a second, please. I'm just going to go into the PDF. Come on now. All right, so we're getting ready to test this 93 even. I've backed off of 92.50 and just calling it 93 even. If we close below 93 even, 89.25 expected. So this market, after consolidating, is turning south. It's it doesn't mean 93 even won't hold. I just, given what's happening here and this sort of rounding top, I actually am not at all going to be surprised if over the next week or so we do test 89.25, which is a big test for this market. If we close below it, I would have to say that any sympathy in the live cattle market for bullish trade, it will be evaporated, which is probably half the reason the cattle markets broke back today, right? Take a look at June. Broke back today. We closed below 120.32 today. We're going to test this 118.40 channel bottom lickety split. And that's our base of support. We close above 122.67, which is the high settlement from last week. Then this 125.07, 124.72 area is expected. And that's the weekly chart. I don't know if I brought this up before, but this is a weekly channel bottom we settled below. This is the frustration with mixing weekly continuation charts and the daily charts. So if we close below 118.40, this 112.25 speed line is expected. That's the June chart. But the weekly chart comes in. Is it the same one? April of 18. Yeah, April of 18. It is the same time horizon. The weekly chart, though, comes in at 110.12, and that's the one that I would actually wait for. If we close below 118.40. So closing below 118.40 is a good sell signal for this market, and we could go short of futures if you like, or yeah, just go short one futures contract, see what happens if that happens, or buy it at 118.40. I say we buy it at 118.45 with a reasonable stop for the day. Keep changing it as long as we keep closing above it. We stay in it. but the day we close below it, we reverse. It's about that simple. Now this is June, by the way, so I kind of take that back. I think we're more inclined to look at August. This is the same concept, really. We close below 117.27 today. 115.20 is likely within a number of days, and that is that same support area that you saw at 118.40 in June. And here's the funny thing. Oh, here, this is interesting. I didn't really make this connection before, but this 110.42 speed line is consistent in the August contract with 110.12 on the weekly chart, which would be a reality by that time because June would likely be off the boards or no longer the lead contract. So there's symmetry here in terms of, you know, this target if August settles below 115.20. Okay, so what else we got here? Feeder cattle. I think feeder cattle did about the same thing today, right? I know we're moving into a half an hour here, but I wanted to catch up on some of these spreads. Feeder cattle almost looks like lean hogs. This 154.92 formation is your base of support. If we close below it, then the August contract is likely to test this 146.92 speed line within 3 to 5 weeks. Until then, this is our area to stick our neck out and buy into. 163.50 still our big overhead resistance on the weekly chart. All right, that's done with the livestock. Take a look at July corn. Well, let's take a look at crude oil, and you can see why is the Canadian not doing anything. I mean, really, it didn't do, it rallied 20 cents today, but you would think with a move like this on to new highs that it also would have closed above 75.40 today, and it just didn't do it. Anyway, crude oil looks bullish. We're in July corn now. And numbers change a little bit, but they're roughly the same. I've got 372.25 upside, and below which this 347.5 long-term support level is expected over the next few weeks. And this is that channel bottom. We tested it in 16, 17, 18. This whole area, we closed below it. Doesn't look good. You know, if you take the distance of this consolidation region and flip it, double it to the downside, that takes us down to this 219 half area, which is also a long-term trend line, just an FYI. Closing below 347 half, not good. But until then, that is good support and is worth buying into. But then we would be waiting for a settlement above this new channel top at that time. And if we got that, the market looks good. All right. So, corn D's. You know, I'm going to finish up then with soybeans and wheat, and we'll just call it a day. All right, we're testing this channel bottom now, 874.75 tomorrow, Tuesday. Closing below it, expect 857.75. Holding above 874.75, 903.25 expected over the next couple of weeks. And that's about all you need to say here because May is going to be going off the, well, not off the board, but we're going to roll to July in the next week or so. So there's that. And finally, July wheat. We're now in July wheat. Bearish for the week itself below 452.75. Expecting this long-term support level I know you're aware of at 432.25. So, you know, we may start putting resting bids in here if you like. You know, tomorrow, 432 half bid. You know, with a relatively tight stop loss. I mean, this low here, let's take a look. This low is 435 half. I see. Okay. Damn it. There we are. So the stop could be a monetary stop because it is an intra-week buy, you know. Here we are. Okay. So where we put the stop, we could discuss. We could just go with the 1%. $400 is going to be like an 8-cent move, right? On a one lot? Or do we buy calls again? I'm open to either, actually. But if we close the week below 432 and a quarter, we need to start punting around for some good puts and just hold them, because that's pretty significant. I mean, I don't think we'll go straight down because there's all these old lows where the market could actually get hung up for a week, two or three. But overall, as we continue into summer trade, this looks pretty damn ugly, and I'd like to participate in that. I would prefer to just be short a future under that scenario. Anyway, that's about it, Kevin. I will presumably talk to you tomorrow.